Hey guys, welcome to my channel. I'm Greg. I'm going to go over gold because quite a few people have requested that I go over gold. This isn't going to have anything to do with crypto, guys. In this channel, I might mention it briefly or something like that, but I'm going to go over gold. I'm going to show to you why gold is going to be going up and down, basically sideways for a little while, but gold's overall trend is up. For those that aren't familiar with gold, gold is actually the true store value. All right, now I'll show you why. Not Bitcoin. Well, maybe Bitcoin down the road. But just as an example, let's say I have a bar of gold right there. Okay, and I'll show you the example right here, just to put this in perspective to get you to understand. This is let's say this is 1922. Okay, this is the bar of gold. Okay, so now we have another bar of gold over here, the same bar of gold, okay? And now we're in 2022, this year, okay? The 1 ounce, you can say that the 1 ounce bar of gold, this is gold, by the way, okay? Like that, this is gold. Hard to write with the brush, guys. Pardon my writing. So here's the deal. So the 1 ounce bar of gold, all right, guys, the bar of gold, this is 1922, this is 2022. The bar of gold in this year was worth $20.60. Okay? Right here, $20.67, 1922. You can see that. It didn't even go up much those years. Now the bar of gold is worth $1,700, right? Okay. So what could you buy? What could you buy for $20.60? Let's say you could buy, for example, a very nice, you're a man and you can buy a nice 3-piece suit with a pair of shoes and a nice hat. Because back in the 20s, they wore the hats and pinstripe suits and nice shoes, right? And you could take your bar of gold and you could get all of that. You could get all of that outfit and be dressed to the nines with your bar of gold in 1922. Okay? Reasonable. I'm just using that as an example, guys. Now here's 2022. Here's your bar of gold. Okay? Let's say you moved forward. We were in the Back to the Future movie and we went over here. 2022. We went back to the future. $1,700 for your bar of gold. With your bar of gold, can you buy a nice suit and a nice hat and a nice pair of shoes? You can. $1,700 will get you a pretty nice suit, pretty nice set of shoes, and a nice hat, just like it did in 1922. Okay? Now we're going to take the dollar. We're going to take the dollar. Here's a $20 bill. And here's a $20 bill. Just like that, you see? Now we got $20 in 1922, and now you got $20 in 2022, okay? What would the $20 buy you in 1922? Well, your bar of gold's worth $20.60. They'll buy you a nice suit with a nice hat and a nice pair of shoes, right, guys? In 2022, what would $20 buy you? Maybe a meal at Chipotle. It certainly ain't gonna buy you a nice set of shoes or a nice outfit or anything, really. You can't even get a shirt for $20 right now. You might be able to get one of those cheap white t-shirts. You see the difference? So the gold held its value, okay? And it will continue to hold its value. I don't have any issue with gold. The only thing is that gold is, Peter Schiff's right. When you have gold, you become like your own central bank, kind of like what people say with Bitcoin. He's correct because it doesn't lose value and it never will, guys. Gold will always have value, so will silver will always have value and never go to zero. The currency that you see right here, this currency at some point, the US dollar will go to zero. All fiat currency goes to zero, guys. So that's the difference between gold and the dollar. The gold does hold its value, okay? I just want to make that clear and put an illustrative example for you guys to let you know the difference, because it does hold its value, okay? Now, here's the other thing I want to say about gold. I have known nobody that got wealthy from holding a bunch of gold. There are very few people that have a whole bunch of bars of gold in a safe somewhere in their house and they're just holding on to it, waiting to be rich. There are some people that are doing that, but there's much easier assets to do that with. For one, real estate. You could have done it with real estate a lot easier. Stocks, you could have done it with stocks a lot easier. And obviously, crypto. You could have done it with a crypto a lot easier. Okay, that's what I'm going to say about that. I don't have anything against gold. I just think that there's some information that's going on around there and people putting out the bad news all the time that's been going on since the 1980s and the late 1970s that, they're waiting for the collapse of the economy and telling people, you know what you need to do? You need to get your dollars out of the bank and go put it on your bed and buy gold. Okay, that's not a good strategy, guys. That's just not a good strategy, in my opinion. Can bad things happen? Obviously you want to plan for things, but to me, that's a little bit extreme. Okay, so here's the gold chart on the 6-month chart, guys. Here's 6-month chart. Personally, just looking at the gold, this is where I think that the United States economy is, the dollar is going to have the issues because this is a commodity. You see this moonshot at the end of this first wave. It's probably going to do a moonshot like that on this 5th wave, maybe even more. Okay, me personally, that's where I think it's going to happen. The whole issue with the going off the gold standard in the 1970s with, what was it, 71 or 72? That was an experiment. They did that. And that's what happened with the 70s, in my opinion, where the 70s had all those issues. That was part of the issue. But most people won't tell you this. They don't realize that is a guy named Henry Kissinger. He had a very, very smart idea. And what he did is he came up with the petrodollar. Have all the dollars, the oil, all traded in US dollars. So that's what's going on. It was switched from the gold standard, and all the dollars are in oil right now, guys. That's why oil is so important, and probably an underrated, I don't want to say underrated asset, but it's a very, very important commodity. Okay, it's in everything. So here's the deal with gold. I'm going to break this down for you guys real quick, and you can see it's in a 3rd wave. Gold's in a 3rd wave. Here's its 1st wave. It did a 2nd wave. So from 1980 to about the year 2000, it was in a 2nd wave correction. That's why it went down. Okay, so the 1st wave, you can see the highest peak. I'm not including this. It goes all the way back to 1835. I'm not including this back here. It's you can't suss that out. It's very, very difficult. All I can go off is with this data right here. And you can see there's a 3rd wave peak. That's the highest peak on the RSI back in, looks like 1974. Made the 3rd wave, came down. That's the 5th wave, making that little bit of divergence. And then you had this correction that lasted for 20 years. And now gold's in this 3rd wave. And it's just going to continue to trend up, trend up, trend up, trend up like this, guys. Okay, ups and downs, ups and downs. And it's just a long process. Now, this area that I have is just a general area. Don't count that, but probably, you could say realistically, gold in like the year 2060 probably be somewhere between 25 to 55, 45, 55, maybe even $60,000 an ounce. Okay, it's going to be up there. It will be up there at that time. So, and then it's going to have a massive correction over here. Okay, and this is going to be massive. This will probably, since this 2nd wave was 20 years. This 4th wave will probably be like 30, 40, maybe even 50 years, guys. And then I'll have this massive 5th wave push, okay? We won't be around for that. At least, well, you never know, man. You never know. Some of you might be around. That's, what is it, over there in 2084? Yeah, some of you might be around, Yeah, that's all right. Some of you might be around. Could be a possibility. So here's the deal. Let me go out to the 1-month chart. 1-month chart. I'll show you guys. Here is gold again. Okay, 2nd wave correction, and then this is the 1st wave that it completed from here to June 2011. So for 11 years, it did a 1st wave run, and you can see right there its highest peak on the RSI, 4th wave, and went up on the 5th wave. You see that 5th wave? It's a gold commodity. Likes to make extended 5th waves. Okay, notorious for extended 5th waves. You can see right over here. See that moonshot? That moonshot. Okay, so here's the deal. Over here on this 5th wave, this 5th wave is going to be a moonshot more than likely. Whoever's around in that time and has gold, those people will do really well, really, really well it's going to blast off more than likely. And here's the deal. So now I have it in a 1, 2. It just hit a 3. You can see that third wave peak, and it's correcting in a 4, and it's going to go up in a 5. I have a target on gold to hit probably about 2,800. It could go as high as 3,000. Okay, and then it's going to correct. Here's the deal with this spot right here. This coincides with the DXY. So if you take a look at the DXY, it's peaking right now. Okay, that's why you have some guys that are gold traders. The gold traders, they're looking to buy gold. They're looking at getting gold now because they know that this fifth wave push is going to go on up. So you're looking at potentially on gold, you know, a 68% increase on gold from there. And then it's going to have a massive correction on that wave. So you have a first wave here, guys, a first wave. So in that area, this is the area that I'm in right now, okay? Let you guys know this area right here. I'm in that area right there, okay? And it's going to have a second wave correction to come back down probably to 2,000 or something like that, okay? And then it's going to go back into this third wave and just keep trending up, just like this, guys. So the ultimate trend on this third wave is just to do corrections all in between there and just slowly trend up and start increasing in value, and then, you know, 50, 60, 70 years from now, it's going to be worth $50,000 an ounce. You know, that time area, I have no idea. This is just a guesstimate, but it could be 2080, 2100. It's hard to pick that time. Okay, you could get it narrowed down, but it's just once the third wave, this third wave is complete, which will take years, you know, then you'll be able to get a real accurate time, you know. So, but I just want to let you guys know what the deal is with gold. So like, I'll go to the DXY. So this is what the gold traders are looking at, guys, is the DXY. The DXY is trending up, it's peaking, okay? It's peaking in this right here, and it's gonna start trending down. And once this trend starts, then gold is gonna start its uptrend. Pretty much, you can be, I don't wanna say you can be assured because anything can happen in the markets. Pretty much when the dollar starts trending down, guys, gold goes up. It's not a one-to-one relationship with Bitcoin, but it's darn near a one-to-one relationship with gold. So you can see with gold, okay, it's going to start, it's going to finish this correction here. This is a massive fourth wave correction that's been going on since August of 20 down in this area. And then it's going to go into a fifth wave push. Now, a lot of these people, when this comes out, you know, the gold bugs and everybody are going to be, you know, it's going to be on YouTube videos. Just they're going to be going ballistic because it is going to go up pretty good, guys. It's going to be a fifth wave push. How long that will take, there's no telling. This third wave went from August of 18 to July of 20. So this move here could take, you know, a year and a half. So you could be looking at potentially, you know, 60% gains just holding gold over the next year to year and a half or 2 years, however long that's going to take. But more than likely, I would say, yeah, it's going to be trending up once this correction is finished. I think there's a potential, not a lot, just a little bit more downside. The only thing that I don't like with that correction on gold, gold's a little bit different asset. It should be down a little bit more, but if you check the weekly, you see how deep it is right now for that fourth wave. So it came down the weekly, reset it. So it's ready. It's getting ready to boom. Now, here's the good news. I'm going to bring in Bitcoin. If this is going to be trending up and the dollar is going to be going down, Bitcoin is going to have less of a headwind and it'll be able to trend up once this is complete. Okay. So that's the good news about Bitcoin. And, you know, if you like gold, holding it at this point wouldn't be a bad idea. I would say it would be okay. What I want to say is Bitcoin too, most likely is going to have a nice trend up once that happens. So really, you know, I mean, there's some people out there that think the bottom isn't on Bitcoin. You know, Bitcoin, in my opinion, is in a peculiar place right now. In my opinion, you know, this is kind of like, this is in an area where you really can't suss this out. You know, it seems corrective and it's going to come back down, but you can get bullishness out of it. It's very, very difficult right now. If you go back and look at the history of Bitcoin, when it started out, like if I go back to the weekly chart, guys, and you look back, you know, in these areas on the like daily chart, when it was in here, you know, you'd say, oh, that's all corrective. And then, you know, look what happened. and it happens with the history of Bitcoin. You know, people are looking at, oh, it's not bullish. You know, it went back down and blah, blah, blah. And then it just starts trending up, you know, so this to me is a peculiar situation. You know, I mean, I still have a bearish bias that I think it can take this low out and hit these areas, but it's hard to say right now, guys. You know, that's what I'm hoping for, but you know, hope's not a strategy. I'm planning for both situations. That's why I bought Bitcoin, you know, at 21 and 20,000 and 18.4. And if it comes down here, I'll get more of it. But there's that chance that it could make a move up this way. I don't think so. That you know, I think there's one more, but you just never know, guys. One of the things too that I recommend, if you want to keep track of gold, it's such a large asset and its moves, it's best to, in my opinion, if you're going to chart it or do anything, it's best to use like the monthly chart or higher time frame charts with gold. You can suss it out a lot better with the higher time frames. You know, I mean, unless somebody who's trying to trade it on lower time frames, maybe, but go with higher time frames. In my opinion, you'll have a better success of being able to suss this out. All right, guys, that's the end of my video. I do appreciate it. If you made it all the way to the end, go ahead, drop a like, hit the subscribe button. Peace.